Have you ever thought about investing in India? When people talk about investing in stocks and indexes, they always talk about the United States, about S&P 500, about big technology companies like Nvidia and Apple. But a lot of people and a lot of professional investors are paying a lot closer attention to India. India is one of the world's largest economies. It has the world's largest population. It has a very rapid growing economy, a rapid increasing middle class, and it's becoming increasingly important for global investors. And right now, there's a lot of interesting things happening in India, like it has long-term demographics, they're passing a lot of financial reforms. So a lot of long-term investors are looking at India and thinking, can they capture the growth of India by buying Indian stock indexes? So in this video, we're going to look at Indian stock indexes. We're going to look at the history. We're going to look at why you should buy them, why you should not buy them. We're going to compare them to the American indexes. And in general, we're going to go through everything so you have a complete picture if you should invest in Indian stocks or not. Now, the very first thing we're going to look at, we're going to analyze the Indian stock market is its history, because you have to understand the history of the Indian stock market and the Indian economy to understand why the Indian stocks are as they are today. So India has for centuries been one of the richest countries in the entire world. It's one of the oldest countries in the entire world, and Indian merchants, they used to trade in China, throughout Asia, in the Middle East, and all the way even to Africa. They used to be known for spices and textiles, and all of this made India one of the richest countries on earth. And also India stood for a decent amount of global output each year. However, with the arrival of the Europeans and the British, a lot of things changed. So the British focused on building railway in India, they focused on building administrative institutions, but they didn't try to maximize local output in India. So when India gained its independence in 1947, a lot of India was underdeveloped. The industry was underdeveloped. A lot of people were living in poverty and were illiterate. So the Indian government had a huge task before itself. And the Indian government, they focused on government or state-focused enterprises. So this regime became known as License Raj because entrepreneurs needed numerous licenses and permits to be able to do business in India. So the Indian economy, it grew slower than other Asian countries, even though India had some success of rising people out of poverty. However, in 1991, everything changed. Due to a serious balance of payment crisis, India opened up. It pushed a lot of financial reforms. It opened up its economy, it liberalized a lot of more. And that is why India is the place it is today. In 1991, it opened up and its technology industry boomed. Companies such as Infosys, that you might have heard of, started growing, and India became known as a tech hub. And in addition, a lot of its traditional industrial companies like pharmaceuticals and banking and consumer goods started growing very rapidly. And this is where we are today. So we are in a very special place in India's history. We are at the place where they're rapidly growing right now. Now, the history of the Indian economy and the Indian stock market brings us to the next point, which is, why are investors interested in India right now? So the first reason is, of course, the huge growth of the Indian economy. The Indian economy is one of the most rapidly growing economies in the entire world. And investors hope that if they invest in Indian companies, that growth of India itself will be reflected through the corporate profits. And reason number two is that India has one of the largest workforces in the entire world. But it's not just that it's large, it's also that it's very young. So it's a large and young workforce doesn't guarantee growth and success in itself, but it sets a very favorable background for investments, for entrepreneurships, and for growth. So its workforce is also drawing investors. Now, reason number three is, of course, domestic demand. So I said when India became independent in 1947, a huge part of the population were very poor. But today, a lot of them have moved to middle class, and the Indian middle class is expanding for every day, and that gives a huge domestic market which companies can sell to and earn profits on. So Indians are now buying banking, housing, travel, consumer products, and these are reflected hopefully in the earnings of the companies. And as said, India is also a digital tech hub. So the tech industry is growing a lot. India is getting a lot of tech companies, and a lot of these companies looks very interesting and attractive for investors. Now, the next reason investors are interested in India is, of course, diversification, and because of the long-term structures in India. A lot of people, as I said earlier, have always focused on the United States. So their investment portfolio is very heavily invested in one place. So they want to diversify away from the United States, and India as an emerging market is very attractive right now. And also a lot of professional investors, they want to diversify away from China as the conflicts between the United States and China is growing, and India is a very attractive supply chain. So all of these are drawing investors into India. And in general, the interest in emerging markets are becoming larger and larger for every day as people realize that the profits here can be huge. All of these reasons together explains why investors, they're getting the eyes up for India. They're thinking that, wow, India is looking very attractive and that there can be some huge profits to earn here. So that's why India is today attractive for investors. So this brings us naturally to the next section, which is the arguments for why you should invest in an Indian index stock. So number one is, of course, that India as a country, it gives both growth and scale. So a lot of markets, they have the opportunity of growth, but they're small. A lot of other countries, they're big, but they don't have the same huge potential for growth. But India has the potential both of growth and scalability. So India is a huge company with a huge population, huge workforce, young workforce. So it's gigantic, and the domestic market is gigantic. But at the same time, it's a country that is also growing very rapidly each year. So that's very attractive for investors. Secondly, it's the corporate diversity. So a lot of countries, they're very heavily screwed toward one industry, but India, it has companies in a lot of different industries. It has huge IT companies, huge pharmaceutical companies, huge telecom companies, huge consumer good companies, huge energy companies, huge software companies, huge infrastructure and industry companies. So it's very diversified. It has huge companies in a lot of different industries. So you're not placing all your eggs in one basket. India itself is very diversified. And that brings us also naturally to the third reason for why people want to invest in India. And it's because these companies, these Indian companies, they're very solid. They have a very good market share, and they have a very good position in the Indian domestic market, and also even internationally in some cases. Now, the fourth reason investors are very drawn to India is because it still has a very long way for development. So India, it has brought a lot of people out of property, but India itself still needs a lot of development. So these companies can take a part in that development, and in that way also gain some corporate profits on it. And investors, they want to get into these profits. They want to gain on the development of India, and that's a long-term development. So they also get some compounding effect here, because it's not just that India is having a huge growth in 1 year, but the outlook is that they're going to have a very huge growth over a long amount of time. And of course, the last reason investors are very interested in India is because of its inclusion. It has had a lot of reforms that have made it a lot easier for investors to invest in India, and they're also developed digitally. So it's very easy for international investors to invest in India. Now that we have looked at the pro side of the India, we also have to look at the arguments against investing in India. So this section is probably going to be the most important section of the entire video. So number one is of course valuation. So Indian stocks and Indian indexes, they're traded at a premium compared to other emerging markets. So for long-term investors, this is of course negative because that can mean that even if India has a huge growth, the huge margins have already maybe taken that into factor. So it could be harder to gain good returns on your investment. Second risk is of course volatility. Emerging markets are a lot more volatile than long-term established markets. So the Indian stock markets, they could fluctuate widely based on geopolitical events, based on energy prices, and based on sudden unexpected news and motions in the markets. Of course, the third risk is currency risk. So when you buy Indian stock markets, if it's unhedged index stock, then you run the risk of also exposure to the Indian rupee. So if you don't want this exposure, you should always buy hedged index stocks. Also, compared to the United States, concentration is also a huge risk because Indian stock indexes often contains either 50 or 30 companies compared to the S&P 500 that is consists of 500 companies. So the Indian stock indexes, they are a lot more concentrated on a few companies. So this is very important to be aware of. Also, there's the risk of inflation, especially energy inflation, because India imports a lot of its oil and energy. So when there's swings in the energy market, Indian companies and Indian stock market are very sensitive to that. And another negative risk by investing in India is its dependency on credit and financial markets and banks. Credit growth is healthy, but if the credit is tied to worse assets, this could be very negative and a big risk. And of course, the last risk of investing in India is that a huge development, a huge growth of India doesn't mean that the stock market necessarily will do well. If the corporate margins become smaller, if the company invests a lot without enough return on investment, then the profits will become bad and you won't necessarily see the huge profits that the country itself is experiencing. And even though the country is expecting huge growth, you have to remember that long-term projects take a lot of time. Infrastructure projects takes a lot of time and they can go wrong in a lot of ways. And even though India has pushed a lot of reforms to liberalize its markets, there's still some heavy government involvement in a lot of projects and a lot of permits needed. So this is all things you have to take into account when you're thinking about investing in India. So my final takeaway is that it's very important that investors don't confuse huge growth, huge economic growth of a company with that its stock markets and the profit of the companies will grow. Those things are not guaranteed, and you should check for yourself if you think that these things necessarily will correlate. And of course, there's huge upsides in investing in India, like its huge growing market, its huge young workforce, its expanding middle class, its huge infrastructure project. But there's also negatives like its sensitivity to energy and oil prices, its sensitivity to different government interventions and regulations. So investing in the Indian stock market, it's very volatile in addition, so it's a very big risk, and investors should always think if India is worth taking a risk. But Indian stock market could be a very interesting stock market to diversify your portfolio to if you want some diversification from the American stock markets. So India, of course, it has some major potential and investors should check for themselves if they want to take the chance on being a part of the economic journey of this country. Now, thank you for watching the whole video. Please don't forget to subscribe, leave a comment and let us know what you think about the Indian stock market. And don't forget to watch some of our other videos and like if you like our channel. Thank you.